Firstly, everyone, thank you. Welcome to the Proof of Research. This is your nerd's favorite podcast. And the goal of this is just to bring a lot of the research up to the surface, help people understand it. And my goal is to represent the people. We're going to discuss the paper called Paper Agents, Paper Gains by Jay and Amy. And Jay is a partner, or right now it says junior partner, but I feel you're already heading there. So, partner at Pantera, I'm manifesting this right now. Jay's worked on a bunch of papers and around TEs related to dark DAOs, and we've been reading Jay's papers and blog posts forever. He's, I think, the most shown post on my X. Every morning I wake up, I hear something from Jay. It's like, what's happening in the world? And we also have Amy, who is a data scientist at IC3, but also works at Ava Labs. And I believe you also graduated from Cornell Tech.
That's right. Nailed all three of it. So
Okay.
you got it.
Yeah, and you were the author of the coin algo paper,
Yeah,
and we
so
did a
the
discussion
sister
around that.
paper is also one that our team at IC3 that we worked at as well.
And Dunning's the person doing all the research behind the scenes. But when I first read this paper, it kind of crushed my confidence and my view on life. Oh man, no free money. I can't just put my money into a pool and let some genius AI do the work for me. I can't just trust some protocol. I think you guys reviewed close to 2,000 different projects, looked at these treasury pools, close to like 1 million different wallets. And my understanding is that a lot of the pools, a lot of the agents are either not trading autonomously, or they're in fact making net losses while the market cap has grown. So yeah, I feel great about crypto so far. But yeah, maybe just to start off, what was the context for this? And if there was any information that I was missing, please feel free to add them.
Yeah, happy to kick it off. I think so. Our paper started from this sort of observation that there was a lot of projects out in the broad universe that claimed to have, since 2024, claimed to have these sorts of AI agents trading cryptocurrencies and a bunch of tokens in some capacity. We saw this, for example, with Terminal of Truths. We saw examples of this with AI16Z, Eliza OS. We saw this with some virtual agents and some of these frameworks out there that all claim to be trading basically a bunch of cryptocurrencies and earning, supposedly autonomously earning money. And so we wanted to dig into that claim a little bit more and ask the question of what is the actual behavior of DeFi investment agents, or all of these agents that we see out there interacting with DeFi protocols and supposedly trading autonomously. And so when we actually we came up with a couple of research questions here. I think the first one is one of scope. So we wanted to understand, it's like, what is the broad landscape of all of these DeFi investment agents? Because as you mentioned, there's close to 2,000 projects that we surveyed that was tagged as AI and crypto. But we wanted to understand what were the different approaches, what were these agents doing, and things like that. The second question was kind of these frameworks and design. So how were these sorts of agents actually designed, and how do they make decisions? The third was one of performance. Did they make those decisions well? And I think the final aspect is basically like, how does this space evolve further? So I think the headline result is that it's very interesting. Even though we surveyed close to 2,000, we found that the vast majority weren't actually trading agents themselves. They were mostly infrastructure projects or some other, but there was a few agents that kind of spanned the scope of either, for example, giving investment advice or passively holding a bunch of vaults or actually actively trading. And two of the most active frameworks were Eliza OS and Virtuals. But again, when we dig into the data, as I'm sure Amy can also give us insights there, we realized that a lot of these projects weren't really making users money. And even if the treasuries themselves were net positive. The users that gave their money to these agents, they were net like losing money as well. So there were a bunch of like interesting like divides and dilemmas that we see throughout that. And finally, we come up with structure for where should agents go, and basically having three pillars there, where the first one is they needs to be like verifiable, that it's actually an agent conducting these trades. They need to be profitable as well. And there needs to be alignment between whoever's giving them money and the actual agent's behavior.
Yeah, I think that was a very nice overview of the main parts of the paper. But maybe to go back to also the very start of why we decided to write this and the motivation, one of the things that we just saw happening in industry, and this came up as a news bit, and we were like, is this too degen for research, basically? Is this something that we should actually study? Is it worth writing a paper about? And I think the reason why we ended up writing the paper is because, first off, the amount of money that is being handled and also the peak market caps were very significant, right? Like you're talking about 2.7 billion for only one of these projects. That's a lot of funds, and actually like a non-insignificant amount of assets that are being managed by these projects. So I think in the future too, there's definitely a possibility where there's another iteration of this where people are also going to trust agents to invest in their money. And I think this is only the first generation of agents that are here and that we wanted to observe in the environment. So based on that too, it was a pretty messy ecosystem. Actually, when Jay talks about those many projects that we surveyed, it was very difficult to understand what each of those projects was actually doing in the ecosystem at all. So we first did like a very high level analysis of like what kind of strategies did each of these projects have, how observable was the data itself or the actual funds, and how money was being transferred or handled. Was it visible to see what kind of tokens or like assets were being held? Yeah, I think just even observing the information and seeing how much was able to be measured was a part of this exercise. Once we started getting this high level form of what the ecosystem looked like, and then also finding these two frameworks that Jay had mentioned, Eliza OS and Virtual's protocol, that popularized essentially a lot of these agents being created, it gave us actually a lot of data to work with and the ability to actually trace and get some analysis about the profit and loss and also the users that were holding on to funds.
One of the thoughts that I had is because these two projects themselves took up essentially the majority of the market cap and the majority of the, I guess, the attention and the focus. Was it not enough to just look at like these two projects themselves and just zone in on these two? And was there even like a need to look more broadly at all the other like smaller projects? Or
I think when we talk about like Virtuals and Eliza OS too, it's a little bit confusing, and let me make it very clear because this is exactly the confusion that I think we ran into when we initially were researching. So from a very high level, there's basically a bunch of, say, investment tools, not even agents. So scratch the word agent, just tools that exist in the ecosystem. So as Jay had mentioned, these can be like Twitter bots that post things and they give you some investment advice. They can be like passive yield strategies that give you a small, steady rate of return on some funds that you lock up. But in particular, the ones that we ended up being interested in were the ones that were actively trading or doing something with your funds. So that included Eliza OS and Virtual's protocol frameworks. And those are two different frameworks, but within there were many, many projects that were launched within those frameworks. And Eliza OS in particular is confusing because Eliza OS was a framework, and is a framework, but it also is a single project, and it's the most popular project that popularized the framework as well. So it's this three-layered cake if you think of it. So like the first layer is the overall ecosystem, everything existing in the investment space, not necessarily like agentic trading or actively doing something with user funds. The second was okay, let's look at these two frameworks or protocols in particular. And then finally, underneath that is, okay, among a couple dozen projects actually within Eliza OS and Virtuals, how did they perform? What was their market cap? How much was their assets under management? What were they holding on to? How did users profit or loss?
And just for the noobs, like I remember like looking at Eliza and it was just like a GitHub repo, right? Like, I mean, I understand there's like a platform you can deploy stuff onto it now, but like, how did you track these projects? Was it like, did you look at how many forks and how many forks were like live, or was it just what's being deployed on Eliza? And I guess maybe that's a little bit different for virtuals, but just some thoughts. Yeah.
Yeah, for sure. So I think one of our big sources of how do you get a lot of these sorts of like data and actually like verifiable data that these are from like Eliza OS agents and stuff like that is that we looked at a lot of these dashboards that were out there. So there's one called DAOs.fun, which is pretty interesting in that they're created by and adjacent to the Eliza OS team, where it allows you to basically bootstrap quickly like an agent with some sort of strategy, and then you can launch that and then it goes and like trade and things like that. And so Eliza OS is like a very, very interesting ecosystem because as Amy said, it started off as this single kind of like AI trading agent that was like going off and doing things. And then the framework underneath Eliza became open sourced. So that became what you saw as like this sort of GitHub repo. And then people created these sorts of launch platforms on based on this framework called like DAOs.fun and some other ones as well, where you can one-click launch agents using this framework with these certain customizable like parameters and certain trading strategies and things like that. And that's how we aggregated a lot of data.
I see. And when you mean like launch, is it launching like a contract on chain, or is it just putting a server somewhere? Like,
Jay, you answered it very well in terms of the way that we were tracing these agents. Actually, I think even now, if you go to previously, it was like AI16Z XYZ
yeah,
maybe, or it was a website where you could see actually all of the top agents, the peak market cap for every single one of those agents, and like kind of a list by popularity. So actually, it was pretty easy to find data about the agents themselves. And then also each of them that did end up launching this treasury through DAOs.fun, that was something that we could actually trace. So we could look at that treasury address and see the volume and activity of funds going in and out. And you could also see on like these dashboards too, the holdings of the assets that they were actually managing. So
right.
it made our job actually very easy in terms of tracing the funds and the activity. One thing that wasn't visible though across the board is like every one of them could have had they had a black box over their agent trading strategy. So what that means is even though they were launched on DAOs.fun, they have a treasury address, they have this like public profile on Virtual's protocol or Eliza OS, actually how they were deciding to make those trades was proprietary, right? So it could have been that they had some like, I don't know, X related radar and also some Telegram channels like inputs or
Yes.
a number of things, right? Or it could have been that it was manually being traded by an individual, but it's since it was black box, there's no way to tell. So that's something that was across the case for all of these projects that we looked at.
So when the contracts, are they just doing some sort of execution, or are they just holding the tokens, and the actual like trading and I guess the strategy part is off chain in some server somewhere? That is that a good way to think about it?
Yeah, that's a great way to think about it. So, like, what's on chain versus what's off chain? What's on chain is you can see the assets that are being held, the amount of funds, and like the treasury address of normally when you launch an agent, like an agent through Eliza OS, they
Yeah.
each had their own treasury. So there was like an actual Eliza OS token that was being representative of how that fund was doing. However, what was off chain completely is actually the agent, the way that the agent was making its decisions, right? So there was no on chain presence of any way that it was executing or making decisions on how to make those trades. So, yeah, two layers where that information was sitting on.
Let's say there could be many of these on-chain treasuries, but they could technically be controlled by one, I guess, the brain behind, or this one dude on his mouse, or one lady on her mouse. And was there a distinction between that part, or would, let's say, those 10 treasuries that's controlled by this one person, is that one agent, or was one treasury one agent? Or one?
Yeah, so I think the real answer is that we can't actually tell from pure on-chain transactions, right? From like when it's created and how it's created, we would assume that these different treasuries and like different trading behaviors are from different people or different organizations or different agents, right? But one of our core findings as well is that because we can only see into the on-chain transactions that they're doing, we can't actually verify if it's an actual human that's actually clicking sign on everything or if it's actually an agent, which is actually one of the reasons why in our maturity framework that we propose at the end of the paper, one of the big asks that we want is to see verifiability. And this sort of verifiability can come in different ways, right? It can be some sort of ZK proof of the actual inference cycle. It can be some sort of TE attested environment. It can come in many different ways. But we need some sort of cryptographic guarantee that it is indeed an agent actually making these sorts of decisions, and it's kind of like tamper-proof. And this is one of the difficult parts about like when you evaluate this empirically, just because we don't have evidence to support this. We can only say that we have a hunch that it is actually agents making decision. We can't say for sure.
Yeah, and maybe answering the question too of like, is it a one-to-one for treasuries? And they each had like a treasury address where we were able to trace the funds on both Eliza OS and virtuals. Of course, like who knows if there's one person controlling multiple different agents and they're all like these top agents with lots of funds at the end of the day. But I think it's actually something that we heard of in our interviews with Virtuals protocol. So they said that something interesting of, we were wondering, okay, how do you know if an agent is going to perform well? Or how do you know which ones are going to be more popular? Or why are people investing in them? What someone had mentioned is that people sometimes would build these agents anonymously, but other times investors or people who were building these agents would actually dox themselves and say, hey, I'm building this agent to bring credibility or like some kind of like secret sauce essentially to the agent that they were actually making and have people invest in it, right? So that's one thing that I think added some level of reputation to agents. But as Jay said, it's not really complete because there's no verifiability of is the agent actually maybe doing what it says it should be doing, or is there even like some sort of proof of what that agent should be doing in order for how it trades funds.
I have one more question on this and we can jump a little bit, but is it the case that most of these, let's say like pools in crypto, whether it's like the yield strategy pools, whether it's like the agent trading pools, whether it's your hyperliquid market making pools, like is this kind of like a similar idea where everybody's kind of dumping their money into this pool, nobody really knows what's happening underneath the hood, and they're just like waking up one day expecting their like 15% yield or something, and if you don't get it, you go on Twitter and rant, and then when you get it, you're just like, yeah, I love this project. Is there like this kind of broader idea behind this that you can apply elsewhere? Yeah, whether it's verifiability, whether it's like this check,
Of course. I think what you're getting at is actually very interesting because the agents that we did a lot of data analysis for and really surveyed was agents that were like actively trading, where we could actually find on-chain records of them like trading in and out of certain projects and things like that. But actually there was actually a whole other class of agents that we discovered in the process that were essentially just like yield wrapping agents, which is more similar to what you're saying, is that I go and find certain vaults, I just run some strategies across all of these vaults and I'm earning, let's say, 8% interest or something on. But of course, these weren't were not really verifiable. We couldn't actually find the wallet addresses of where this was happening, which is why we didn't really include this within the scope of our study. But certainly that is one of the visions of where the space wants to go, is that, oh, here's my money in like a particular wallet. You as an agent, go and figure it out, earn some more money for me. So I think that is really interesting. Obviously, reality is a lot more complicated, but I think that's the vision that some people are building towards.
Yeah, granted, I don't have probably as deep of knowledge as about hyperliquid as some folks out there, but I know we did discuss this when we were talking in person about this paper previously. And one of the interesting things that was happening for the agents that we studied under the Eliza and OS and virtual protocols were that their holdings were generally extremely small cap tokens. So kind of like meme coins or very volatile tokens that could go up and down very quickly. And they also, when you're talking about tokens like that too, it's generally stuff that has lower liquidity or smaller, just in general, it's small volume, right? So when you're talking about large amounts of trades or maybe like agentic trading in these sorts of spaces, you can imagine if there's some hype on Twitter or X about like a certain token or some noise that's being made, trades can get crowded out pretty quickly. And like agents can probably make some very bad decisions, or like most people would make bad trades or losing trades if you have everyone coming in at the top of the hype cycle, right? So I think in that sense too, there's, yeah, I think some wishful thinking in that you're hoping, oh, I'll just put my money into one of these funds and it's going to do some miraculous work. But when you look at the data for the people that are actually profiting, it's a pretty small percentage of people. And the people that are profiting, maybe it's, we also can't tell you the reason why, but maybe it's because they're a genius with some really good trading strategy, or it's because they're insider traders. Who's to say? But yeah, there's basically only a small percentage of people that are actually winning.
That makes a lot of sense. It's kind of how I died this market. I just put all my money into a bunch of these pools and just put out some incense candles and was just like, oh, please. But I also wanted to understand a little bit about the profit and loss side. And I think you guys benchmarked against like Sol's performance. And the thing maybe I don't really like understand was, why did you guys compare it with the market cap? What was the relationship between the profit, the loss, the market cap of these projects? And because if I was to do it, I'd just be like, okay, maybe I just want to see which agents are making money, which ones are not. But was there this kind of idea you kind of trying to get across? Yeah.
Basically, it goes into how these agents usually work. So how these agents work is that you buy in to, let's say, like this particular token and things like that. And then that token will go into the agent's treasury. And the agent can then sell part of that token to purchase, let's say, Sol, to purchase some of these other assets that are out there to actually start making trades and hopefully earn more money and like basically increase your own like shareholder or token value. And so the reason why we benchmarked it against Sol is just to account for what's been kind of the volatility and behavior of Sol versus overall like these agents as well. And of course, like what we found is that these agents lost a lot more money than if you just had held Solana, even though both dropped during this time period. And at the same time, like one of our other conclusions regarding like kind of stakeholder alignment is that like even though some of the agents did actually have like profitable treasuries, those profits were not necessarily passed on to the quote unquote shareholders of that agent, whether through some sort of like dividends or yields or some sort of like token price kind of reflection, which kind of goes back to the point that like a lot of these trading agents essentially were behaving as kind of like meme coins, and they were mostly mimetic rather than having any sort of like fundamentals based. Of course, since that paper is published, we've seen a couple more examples of like iterations on this sort of idea, but at least for that sort of time period surveyed, most of it was very like meme coin speculation driven.
Yeah, and you brought up an interesting point, Rongxin, about the market cap versus assets under management, which we found to be extremely interesting. So when you talk about market cap, as Jade mentioned, it's basically the amount of like, you can see it as kind of community sentiment, right? How excited people are about a given project. And then assets under management was actually the amount of funds that those treasuries were holding on to make trades. So given that relationship, there was a huge difference between the market cap value and the assets under management. And I think if anyone was like maybe took enough time to look into the relationship between those two, if they were a more knowledgeable investor, they would see, oh wow, there's like 10,000x sometimes the market cap compared to assets under management. So I think that was another signal that there's a lot of hype driving these projects compared to maybe the actual performance or the actual money that was being managed by each of these projects. I think one of the things that Jay had mentioned about the treasury performance versus the like user profit and loss too is important to note here. So not every treasury came out on top. There were some that actually lost a decent amount of funds. Terminal of Truths lost a lot of funds, as shown in one of the graphs that we created. There were also others that like almost zeroed out, but ones that made a decent amount of funds and kept held on to them were Eliza OS or AI16Z, also AI Accelerate DAO, and a handful of others. But when you look at the actual like user profit and loss side, that there's like a big spike in early like profits when there's a lot of activity and hype going on in late 2024 into early 2025. But generally, as the work has continued into like early this year, really a lot of that activity has subsided and profit and loss has basically netted out to zero for a lot of these users.
Understood. So maybe the idea is that the focus isn't on the actual performance of the system, but rather just on increasing the overall market cap or the valuations. And that may be one perspective. And maybe there are one or two that actually performs, but relative to the benchmarks, how does that perform? And that may be still a question. I thought it was interesting the period that you guys did this research through. It was it the last bull cycle? Can I say that? It's like the peak hype cycles. And I feel like retail investors, a lot of people come in during the peak and performance usually goes down from here. If you were to do this research again, starting, let's say like in March or something, do you think the results will be very different with the, let's say, whether it's with the new models that came out, whether it's with the type of users that's still left on chain, the type of assets that people will be trading? Do you think it will be very different, or it will just be the same?
I mean, my hunch is that directionally, it's probably going to be similar. The magnitude wise, it might not be as severe as when the time period that we chose. For example, one of the experiments that did occur right after, outside of our scope, right, was something called the Alpha Arena, where basically like this was about like 6 different LLMs, like at the time, all like very frontier models trading on Hyperliquid, having $10,000 and trying to trade. And it turns out everyone just lost money and none of them really outperformed Bitcoin. And so it seems the results do generally seem to hold, or at least that like LLMs alone cannot actually trade that well. However, LLMs can actually do better when you have some aspects of human input. And if you only outsource, for example, like the research signal curation, and then you have some, for example, human decision making in the loop, and then like further execution. I think I've seen some models, obviously outside of our scope here, that have been doing better, or at least in backtesting, than the results that we show here. So I think there's definitely still a lot of iteration. I think this is a gradual process. You're not going to wake up tomorrow and say, hey, look, suddenly there's a Fable that's able to make me $10,000, right? It still needs a lot of hand-holding and harnesses and a lot of iteration to see how do LLMs gradually enter this sort of trading process.
Yeah, I would agree with that. The difference is between back then and now is that I think like back then there was a traceable treasury that was public and people could see activity on, and the agent itself was proprietary. I think now people are building on their own and not necessarily using like a public framework or a platform where people can trace agents. One thing that I have seen as of late is like recently I looked into ERC 8004, which are trustless agents for like during the IC3 summer boot camp. And that was a little interesting because it's also a public listing of agents that are out there and supposedly like what they do. For those on the line that don't know what trustless agents are or what this framework was supposed to bring, it's essentially supposed to bring a system of 3 different registries for agents. So the first is having an identity registry, the second is having a reputation registry, and the third is having a verification registry, which basically says, okay, this agent does what it's supposed to do. And so between all 3 of those components, like it's supposed to boost agents that are actually doing a good job. And reputation is like community sentiment, right? Like, oh, this agent is great. Like I've made X amount of money with it, or so it's so much better than the other agents that I use for investing. But it turns out actually like after looking into it a little bit, it's pretty gameable as it is right now using like a reputation registry. And the one thing that I think is still able to be to make it actually a useful tool is this third aspect that's not yet implemented, which is the verification registry. It's essentially like what Jay had mentioned earlier and what I had mentioned earlier of does this agent do what it actually says it's going to do, right? Maybe the agent says it's going to trade on, I don't know, rare earth minerals and like semiconductor parts, right? And then you should check out this like sister paper also written by folks in IC3 called PyCreds. It's Creds, CREDS. And it's this idea of using like essentially like a TE system to not have to reveal anything about your agent, but verifies that your agent is doing something that it says it's supposed to do. So I think if it were to be built again, like if you were to do this all over again right now in this day and age, I think that the tools are existing out there. I don't think there's something that's been as popularized and made like, extremely retail and consumer facing as Eliza OS, as in like the late 2024 hype cycle, as you had mentioned. I think it actually is a really good observation of the timing and why people jumped into the fray. It's like there was a lot of excitement from general consumer end. And now I would say if you were to try to launch something like that again, I don't know how much. Yeah, I think you would get people with a little bit more skepticism. Maybe the closest thing I can think about that would be related to this is maybe people trading on Hyperliquid or creating their own agents that are like doing their own trades on Hyperliquid. But I think there is yet to be another popularized platform where everything is very traceable or pretty public.
A thought that I had is when I've been following all these agents, I'm like, oh, all right, this is awesome. I'm tracking what people are doing. In the future, why would somebody build a public sort of system and they can verify the strategy and put it out there versus just doing it in-house, in their basement, just secretly making money? What's the trade-off? What's the pros and cons?
You can totally just run this. Actually, I do think people probably do this today where they have their own private setups and then they're just not going to tell anyone about it because it is actually earning money, right? That's totally plausible. Yeah. And so we do see public ones. And you have to ask, why do people publish these sorts of frameworks or some of these harnesses and things like that, right? And maybe it's because they want you to kind of pool capital. Maybe it's because it is these sorts of shared frameworks and more harnesses than it is the individual agents themselves. So there's all different explanations out there. We can only speculate as to why, but that's the state of the empirical evidence out there.
Yeah, I mean, one of the original ethos, the reason why Eliza OS came to be after we did, again, like interviews with people on both protocols is that it was originally meant to democratize these like private trading strategies that were very locked away in institutional knowledge of, I don't know, brilliant minds and companies. So that was the original goal, was to like, let's democratize this information and make it so that everyone can benefit from these proprietary trading strategies and instead have agents come up with these like really smart strategies and have like a reputation that enables people to invest in the best performing agents. Obviously, the actual results landed a little bit further away from it, but I would hope actually like in the future there's some form of this that is actually landing closer, maybe in the DeFi space. I think like a couple of things that are missing though is like probably like as deep of liquidity in DeFi as compared to maybe like traditional markets. I think another thing is like the lack of when in traditional finance you have fiduciary duty or people who are like obligated by law to make decisions for your with your money because they're doing it out of the best interest for you. So I don't think there's anyone that's obligated to do that over in DeFi, but I think there's a lot from existing traditional finance that maybe can be emulated as well with these in the agentic space as well.
Could it be the case that, for instance, if I make something like proprietary that's performing and there's a way to prove my strategy without revealing what it's actually doing, then it essentially allows me to raise a massive fund without actually going through a lot of the requirements and giving access in that way. But I guess otherwise, I feel like maybe the market makers or they're maybe taking advantage of this, but I wonder if they're doing it in like a negative way. They're like putting these people against their own trades or something, but that would be my thought. But
yeah, I think it's true. Like I think it would be really ideal if you did come up with an agent that you should be able to have it listed as a top agent or like by performance and show provably like yes, it's doing what it's supposed to be doing. You don't have to reveal your strategy. I think that's definitely the ideal goal for agents in this space. That's also like the reason for why EIP 8004 was put out as well. Actually, EIP or ERC 8004 came out after this wave of Eliza OS and virtuals and these initial investment agents. I'm not sure if it was a direct response to it, but I think it definitely hits on some of those notes that we recommend towards the end of our paper, where we say, here's what is needed for the future. We want to make sure that like the actual performance of these agents is like then reflected into the shareholders or the people that are investing in them.
Can I add just one last question, then we can discuss any sort of future work that is happening? But if there was some sort of like a TE or for the system to generate like a proof, how would that work? Does the strategy kind of have to report something on a random basis, or how does this kind of stuff work? How is it not gameable where I can just like, I'm going to generate the proof. I'm going to tell you I'm buying gold, and then as soon as I generate the proof, then I'm going to go and buy some like copper or something. Yeah.
So we actually built something over the summer camp. Again, this is like the IC3 summer camp that happened last month.
Yeah.
Essentially, what you would do is you would have some agent that is running autonomously, is doing like trades autonomously, and you send an attestation to a TE that says, here, tell me, is my agent doing what it says it's supposed to be doing? And so there's like some evaluation, right? And that evaluation tool or like that verification process, it can be used for actually any number of things, not just evaluating, does this agent say it's doing what it's supposed to be doing, but it can be like, I don't know, is this process DORA or SOC 2 or like ISO regulatory friendly, or it can fulfill any number of different verifications. So this T is not just like a one-time thing. It can be actually like a multi-purpose kind of attestation tool. And for each of those, then like it spits back out a result to this contract registry, which then provides like a check mark or a score about how that model or agent is actually like meeting those standards. There's no way to like game basically that scoring process or the evaluation that's happening inside the TE. So in that way, like people can then just openly see on that verification registry, like, okay, I know that, say, Amy's agent is performing the way that it says it's performing, or if I'm like maliciously taking people's money and like actually putting it into my own wallet, then I'll like that might also be revealed as a part of the scoring process too. Like you can have different kinds of outputs for this T verification that then demonstrate certain capabilities about what your agent does.
Got it. I feel maybe this is the ultimate thing is like there needs to be more products and projects coming out using TEs. I think like on those using it for the kind of perp exchange, and maybe this is the ultimate solution. I don't know. I think out there in the future that's just building stuff with TEs, but maybe that's something Jay will do.
We'll see. We'll see.
Yeah,
Never
one of
say never.
Jay's
Yeah.
investments.
Yeah,
Yeah.
exactly. Okay, so is there anything that you're working on like right now that could be interesting to share?
I think more generally, agentic trading is one of those things that's a key part of what at least I see as where this sort of agentic economy is going, or agentic payments as a whole. How do agents actually interact with DeFi? Obviously, there's other themes in that as well. For example, like API payments and things like that. So I think it's a very interesting part of like a broader trend for like agents actually coming into the economy and like basically participating in various different ways. One of the recent IC3 papers that was just published is also on this sort of like intersection between AI and crypto that talks about both what crypto can do for AI as well as like what AI can do for crypto as a whole. So also recommend you checking that out.
Yeah, I think just the end takeaways too is that yes, we created this paper with the initial cycle that of news that it was happening in, but a lot of these notes for how things should improve in the future and also cautions for future investors too, the next time something like these frameworks does come out in the future, like they still should hold, or maybe they should guide what kinds of technologies are put in place to protect consumers or investors, right? So I think the one situation, and these projects might age and be a like a sign of the times, but the general stories are going to still matter. The other thing too, I'm glad Jay featured the crypto AI and AI crypto paper, but CoinAlgs is the other offshoot of this paper that I would recommend people giving a read to as well. It's basically discussing the trade-off between transparency of models or agents and algorithmic trading and being able to be profitable. So it turns out if you want to be transparent and show information about your model, it's you also can't make a lot of money, or you get a lot of your money like and potential profits front run, right? Something that we prove in that paper. And then I featured PyCreds earlier, but giving it a shout out again. That's done by a couple of other folks in IC3, like Sam Breckenridge and Danny Villardell. And they, again, showed that you can provably verify something using this like T framework. And it nicely ties into some potential work with trustless agents in the future.
Okay. Jeez, I feel like we just got to the starting point. But that's amazing. I think that's really it from me because I come from it very much from a selfish angle. I'm just looking to see what the next steps are, what are the key innovations, and I feel like maybe the people within the ecosystem, a lot of them are thinking about similar questions. And we'll be following along to the future topics and papers.
Of course.
Sweet.
All right. Thank you, Rongxin.
Thank you so much.
No, appreciate it. Thank you.
Bye.
Take care.
Thanks.